as we celebrate 3 years of disciplined investing with our VRDDHI PMS. Markets throw new opportunities and challenges every cycle. Having a time-tested investment philosophy during this time can help you navigate these uncharted waters. That is why we welcome you to join us this Saturday, our fund managers of VRDDHI, Mr. Rajat and Mr. Rohit, from 10 a.m. to 11 a.m. as we tell you a lot more on VRDDHI's disciplined approach to investing during the ongoing bull run. For the second webinar of the day, we talk more on setting the right milestone. This will take you through things like how to set your goals, distinguishing between short-term and long-term goals, things like investments and savings instruments that you use to achieve these goals, as well as how to look at asset allocation. This webinar will be from 11 a.m. to 12 p.m. Are you someone who's worried about the differences between the old tax regime and the new tax regime? Join us for the upcoming comprehensive tax planning webinar from 12 p.m. to 1 p.m. where we talk a lot more on tax planning, how to do better tax planning and how to do it more efficiently. For the final webinar of the day, we talk a lot more on 401k portfolios, how to review them and rebalance them in your retirement portfolio. This webinar is from 7:30 p.m. IST.
Why chasing performance can be dangerous now. In every market context, there is a risk that comes from the valuation. The prevailing valuation in the Indian market is at a historic high. But are we really concerned about it? Looking at the behavior of investors across the system, it appears that we are not so much bothered about valuation. We are more bothered about participation. What are we now focusing upon? We seem to be focusing upon two things: price performance and past performance. What is price performance? Price performance is simply the movement in stock price. Faster the stock price moves, more interest is generated, more people start looking at it, and more people want to invest in it. This seems to be happening at the stock level. Then you have past performance. This is happening at the product level, whether it's a mutual fund, PMS or whatever. It could be even an index fund. In a product, you are looking at the past performance, and whichever product is showing the best past performance is attracting the highest amount of money at the fastest pace. So at the stock level, people are chasing stocks which are moving up faster. And at the product level also, they are doing very much the same thing. The problem is, if you do it closer to a market bottom, you have a very high chance of success. But if you do it closer to a market top, you have higher certainty of failure. So now ask yourself the question, are we near a market bottom or a market top? And you will know what is the risk in our behavior. Behavior matters the most, especially when you are near a bottom or a top of the market. So knowing where you are in a market cycle should tell you exactly what you should not do. It should guide you on what is desirable behavior and what is most undesirable behavior. When you look at past performance and price performance as the sole criteria for investing, especially close to a market top, chances are you will actually buy weak products or weak stocks. What do I mean by a weak stock or a weak product? Let's start with stock. Sometimes industries come into a lot of circumstantial luck. All factors which have to help the industry fall into place. At that time, the industry experiences an earnings blowout when everything that has to fall in place does so, and when everything that must favor you actually plays out, chances are that your performance will look eye-popping. But that performance won't be sustainable. Market starts to believe such performance to be sustainable. That is the problem with taking recent term performance in a business into the price and assuming that that is sustainable. The market seems to be doing this in sector after sector for the last 2 years. And now it is doing it in the maximum number of places. The market simply disregards the scope for bad news to come in most areas. We are assuming that only good news can come because the stock price is reflecting such confidence. That is where price performance becomes a tremendous risk to you. Now to the past performance, which is dominating the product space. Past performance tends to be the best when price performance is at its glorious best. So when you have stock level price performance at its best, you are going to have product level past performance also at its best. So you're going to see all of us, mutual funds, PMS, AIF, everyone showing our very best performance. But that should not be the reason for you to invest in any product. And I say this with the full awareness that I am also a manufacturer and these risks apply to me as well. But it's good to talk this openly because investors should know how to set their expectations. And as product manufacturers, every one of us has the responsibility to moderate these expectations, calibrate these expectations, and to set the right expectations. But when price performance is at its peak and past performance is at its peak, the tendency is to keep quiet, because if you keep quiet, people will believe that this is sustainable. And when they think it is sustainable, it is going to translate into very high, strong investment inflows. So because people want inflows, they are going to maintain silence. And that silence is mistaken by the market to be tacit approval of the investment merits. But that's not the truth, and that's not the case at all. Everybody knows the truth. Simply because somebody doesn't articulate the truth doesn't go anywhere or it doesn't go away. It's right there. So it's the responsibility of the investor to see the truth. And it is the responsibility of engagement like this video to bring the truth before you and to let you decide whether you like it, whether you agree with it, or you reject it. Whatever be your choice, I would still say that price performance alone cannot sustain investment performance, and past performance, when at its best, is at a risk to the immediate future performance. That's a universal truth, and it's not going away anywhere. Be aware, and thank you for watching this video.